Hey, good morning, everybody. Thanks for joining us today, Thursday. Glad you were able to come listen to us today. Hey, as we get ready to start today, we do have interest rates to talk about and how they may be applying and affecting our markets today. So I hope you get something out of that as we get ready to talk to Dave here in just a few moments. Before we do, I do want to remind you about our free report on retirement strategies. All you have to do to get your free retirement report is go to statlerfinancial.net/LM-3. Take you right there. You can get your free report on retirement strategies. Folks, it's something you need, especially if you are 5 to 10 years out from retirement or you've already retired. Hey, Dave will be with us here in just a moment.
5.7 Light FM. It's Carly Ray Jepson there. Hey, she's that important. We use her middle name to her. Maybe she's just from down here in the South. It's 8:41. Time checking on your money and find out what Wall Street's doing to your retirement fund today. Lots going on. Time to check down with Statler Financial Services' own Phillip Statler, who's ensconced in his office in downtown Sebring. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well this morning. It's Thursday, and it's the Thursday after the Fed released their minutes and their rate cut yesterday.
Yeah, I was going to say the statement from Chairman Paulson, if you wanted to hear absolutely nothing useful, Paulson at 2:30 when he came out to explain the rate cut, he said, there will come a time when I think we've done enough, but there may also come a time when the economy worsens and we'd cut more aggressively. We don't know. Boy, that gives us guidance like nobody's business, right?
Yeah, it's kind of like just float along there. We'll do what we want to do when we think it's time to do it. But, you know, it was kind of interesting yesterday when I first saw the rate cut come out. I looked at the markets. They tanked pretty big. I mean, the S&P was down more than $20.
Yeah, Dow went down by like 200 points right at 2 o'clock when they made the announcement. When I saw the turnaround, I thought Paulson had said something interesting.
Well, me too. And so I was trying to figure out what in the world had happened. And so I started digging a little bit this morning. And, yeah, he came out and made that, you know, kind of that remark in his, I guess, his press conference. And everything turned around and bounced back. And it was basically a mixed, pretty close to flat day.
Yeah, I mean, really, 36 points up on the Dow is going nowhere. 1 point up on the S&P is also going nowhere. And 8 points down on the NASDAQ is about as close to going nowhere as you can get as well. I guess what the market was looking for, you know, just judging by the rebound after the Paulson remarks, was reassurance that the Fed wasn't asleep at the switch, that they were just going to continue watching things.
Well, yeah, I think that's what it is. I was reading some notes about the vote. And so basically you had 5 that wanted to cut more and wanted to say we will cut more this year. You had 5 that were happy with where we were. You had 7 that didn't want to cut at all. So I'm finding that interesting to see, okay, at least there's enough there to continue cuts if necessary, but don't look for any cuts unless something drastic happens. And I this side note I saw in a report I was reading said, so expect President Trump to tweet that he's going to, press more tariffs on China to affect that so that the Fed will cut rates.
Oh, goody. It took Trump about 30 seconds to tweet on the decision to only do a quarter-point cut. I noticed that in one of the pieces I read, a couple of the Fed governors on the committee actually wanted to raise rates, which I found kind of counterintuitive to boot.
Yeah, you know, I did see this morning that the Bank of England, I guess, left their interest rates the same, given that they're still dealing with Brexit and the uncertainty that's giving those folks over there.
Understood. That's the picture of a bank that really is going to need some tools coming the Brexit time because nobody knows what the Sam Hill is going to happen. Start out with the federal government's data dump this morning, and I think I've got 3 market surprises. First-time jobless claims. One of the readings I was reading, they were expecting 215,000. Came in with 208,000, a little bit of growth from last week, but still a pleasant surprise to the market, I think, right?
Yeah, it was. I mean, my number was 214, but still 208 to 214, that's a big surprise. It was a little bit above what it was the prior month in terms of unemployment numbers, but still a surprise, and that's got to be a good thing. We still look at having basically full employment, and so that gives rise to inflation within itself.
No, understood. The other items that came out, this takes more explanation than we've got time for, but the federal government keeps track of their current account deficits, which basically, in shirt sleeve English, boils down to how far in the red is your checkbook. And it declined by 5.9% last quarter. I didn't see what the market expected, but anytime our deficit goes down, I got to believe it's good news and a surprise to the markets.
Yeah, I would too, Dave. And I don't have that number either as a percent. But I think if your checkbook's looking better, it's got to be better sign for the economy.
I just got that's intuitive to me, and I couldn't find a market expectation on that. Another minor one that you wouldn't really watch normally, but because it's a weird time in the markets, the Philly Fed Manufacturing Index came out, and Bloomberg said that they were expecting an 11. That's a decline from before. It was a decline, but it only declined to 12. So in that portion of the country, at the very least, things are looking better than anybody expected it to as well. Boy, everything's coming up roses this morning, aren't they?
It definitely looks like it on the macro side. So that's some good things happening there, and hopefully we can keep it going. I was looking at interest rates this morning in terms of just different countries, and so I'm thinking it's kind of a mixed bag, but we are the almost the only country, at least that's shown on the board, that has a positive interest rate. Us and the UK. Everybody else has a negative interest rate on their 10-year government bond.
Wow. And we're whining about the notion that ours is declining into the mid ones.
Yeah, exactly. Yeah.
It's a weird time to have money invested. That's for doggone sure, because trying to figure out when all the rules are getting broken is kind of hard. Speaking of figuring out where money is going, what are you showing in terms of quarterly reports, many of the companies out there? You got a couple?
I do have a couple. We're getting really towards the end of earnings seasons here, but I had Darden Restaurants come out, the parent of Olive Garden. They came in at $1.38 a share. That was a penny above estimates. However, revenue came in below forecast, and they really missed, I think, on comparable restaurant sales. They were up 0.9%. They were expected to be up 1.3%. So that's kind of I think it's a big miss. There's no change right now on the stock. It's basically going to open where it closed yesterday. The other one
I was going to say, I don't see a change on my winners and losers list, so evidently people aren't too excited, right?
No, I guess not. And the other one I have is Herman Miller. That may not be a name people are real familiar with, but they make office furniture and that kind of stuff. And they had a pretty good quarter. They beat by 6 cents a share. Revenue was above forecast, and they came in with number 3, a beat on the current quarter guidance. So good things across the board. They're up 9.5% this morning.
That's 3 for 3, and that generally is good news for stock prices, isn't it?
It is, and actually, given what their number is right now, they will open at a new 52-week high.
All right. So yesterday, after the Federal Reserve announced another quarter-point increase or decrease in the interest rate, the markets kind of recovered to where they were and yawned a little bit. At the end of the day, the Dow was up 0.13%, NASDAQ off by 0.11%, and the Standard & Poor's up by 0.03%. That's about as close to a corporate yawn as you can get. Are we going to keep that yawn going this morning, 45 minutes early? Which way are we going, Phillip?
Hey, we're pretty flat. I mean, about as flat as I've seen us. The Dow's not going to go anywhere. The S&P's not going anywhere. NASDAQ's down less than $2. We even got gold and silver heading down. Gold's down 0.5%, and silver's down about 0.1%. The only thing we have really going up big time is oil again, up 2.2%. to $59.40, getting close to that $60 number. And I saw gas up to $2.60, I think, today.
Yeah, it was up a dime. I know when I paid when I gassed up on Wednesday morning, and I suspect it's up even more now, isn't it?
Yeah, I think so. When I drove in today.
I got you. Kind of interesting. I noticed that the yield on 10-year Treasury notes from our country down by about 4 basis points, which kind of indicates at the very least that some of the investors are looking for a little stable cover, trying to figure out what's going to go on with equities today. Fair guess?
I believe so. I mean, I think we're going to see people, and you wonder why people go to the U.S. Treasury, and that's why, because it pays the highest interest rate of any government bond out there.
Absolutely. And even though it ain't much, at the very least, you can be pretty well guaranteed of getting nothing, and that beats the risk of losing, right?
Exactly. You're so right.
Absolutely. Speaking of getting nothing for your investment, you want to improve on that picture. How do I get a hold of you in order to make an appointment to preserve my financial health during retirement, Phillip?
Devin, give us a call at 382-0037, where we can sit down and dive in and make sure that they're not taking too much risk in their portfolio, given some of the volatility we've seen here lately. And then they can join us every weekend, where we've got a lot of good information on the Statler Financial radio show, 6 a.m. and noon on Saturday morning, and then 10 a.m. Sunday mornings on News Talk 7:30 a.m.
All righty. And back here one more time for the week tomorrow morning, same time on Light. Fair enough?
Absolutely, man. Have a great day, and I'll talk to you tomorrow.
Thank you very much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I hope you enjoyed the day. I hope you got something out of our report today. Thank Dave for being here. And then I want to remind you, though, about our free report on retirement strategies. Please, folks, go to the website, statlerfinancial.net/LM-3 to get your free report on retirement strategies. It's that important for your retirement. Hey, until tomorrow, have a great day, and I look forward to talking to you again.